the handful of times where we see Bitcoin break its correlation with liquidity, it's often due to valuation extremes. And there's a bunch of different ways to measure Bitcoin valuation. You can look at like on-chain analytics and stuff like that. My generally my favorite is market cap to realized cap, which is to say, market cap is like what's the current price of the coin multiply it by how many coins there are. Realized cap is like the on-chain cost basis. It's like the current value of all coins the last time they moved, the dollar price last time they moved. And so when you get those really big bull runs, sometimes market cap can get way ahead of realized cap.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. The trajectory of Bitcoin towards a possible $120,000 price point reflects more than just market speculation. It underscores its developing significance as a transformative financial asset. Since its launch in 2008, Bitcoin has effectively tackled systemic inefficiencies such as settlement delays, transaction reversals, and centralized control through the utilization of decentralized blockchain technology. This advancement has facilitated rapid, secure, and conclusive transactions, positioning Bitcoin as a fundamental element of contemporary financial systems. Lyn Alden emphasizes Bitcoin's distinctive capacity to reconcile transaction speed with settlement assurance, thereby promoting an efficient global value transfer mechanism. The current bull market highlights the significant potential for transformation as institutional adoption and the growth of decentralized finance, DeFi, reinforce Bitcoin's role as a hedge against inflation and a dependable store of value. The ability of Bitcoin to maintain stability during market corrections reinforces its potential for long-term sustainability. The asset's capacity to endure fluctuations while sustaining positive price trends indicates its development into a significant entity within the global market. The increasing institutional interest and expanding use cases for Bitcoin indicate a significant upward trend, suggesting its role as a crucial asset in transforming the global economic environment, and lots of things Lyn Alden discusses. So please watch the video. To end and like, share this video and subscribe our channel Everyday Finance. Thanks.
On liquidity for 2025. I think that, as I mentioned before, we're kind of coming out of signs of peak credit tightening in the U.S. And so that's pro liquidity. And globally, we're seeing more stimulus out of China. That's generally pro liquidity. And like we talked about earlier in the interview, what happens to the TGA in the first half of 2025 is a big yes or no variable for what happens with liquidity. You could have $800 billion of TGA money pushed back into the banking system, or not, depending on if the debt ceiling is becomes a protracted battle or not. So I don't really have a big opinion on magnitude, but I generally have a positive view on liquidity for the next 12 months, and therefore my view on Bitcoin is also positive for the next 12 months. They have a lot of correlation together. And the handful of times where we see Bitcoin break its correlation with liquidity, it's often due to valuation extremes. And there's a bunch of different ways to measure Bitcoin valuation. You can look at like on-chain analytics and stuff like that. My generally my favorite is market cap to realized cap, which is to say, market cap is like what's the current price of the coin multiply it by how many coins there are. Realized cap is like the on-chain cost basis. It's like the current value of all coins the last time they moved, the dollar price last time they moved. And so when you get those really big bull runs, sometimes market cap can get way ahead of realized cap. Whereas other times market cap is not that much higher, or it's rare cases below realized cap. And those tend to be less dangerous from like a valuation standpoint. The sentiment and the overbought status is less extreme. So when we look at that, I expect liquidity to go up over the next year, and I don't see any signs of like extreme Bitcoin valuation. That that combination generally leads me to be pretty bullish on Bitcoin. I think a lot of that is liquidity. It's
Okay.
similar to the 2000s decade. So you saw gold go up quite a bit that decade, while the S&P 500 also recovered from its post-dot-com lows. So it's not like S&P 500 and gold can't go up together. If you look at emerging markets, often because of the denominator is debasing so quickly, stocks and gold are going up together relative to that currency. So I think a lot of this is indicative of liquidity. So late 2022 was the liquidity bottom. And as you see on the chart, that was also the bottom of a lot of these other assets. And so, ever since that period, we've been recovering in liquidity. In the recent liquidity research report I collaborated with Sam Callahan on, we measured how correlated different asset classes are to liquidity. Bitcoin was number one, and then gold and the S&P 500 were also pretty high.
Mm.
When you get down into like international stocks and bonds,
Bitcoin has recently experienced a decline, dropping below the $100,000 threshold to a low of $99,450. This movement was influenced by hawkish statements from the U.S. Federal Reserve. The Federal Reserve indicated a potential reduction in the frequency of rate cuts in 2025, which has raised some apprehension among market participants and financial experts. A pseudonymous crypto analyst, W Capital, has identified a potential bearish engulfing candlestick pattern on Bitcoin's weekly chart, indicating a possible downtrend in the near term. Nonetheless, this trend remains unverified until the conclusion of the weekly period, allowing for substantial fluctuations in either direction. In light of this pullback, a significant number of traders interpreted it as a standard correction, rather than an indication of substantial issues ahead. James Lavish, a prominent voice in the cryptocurrency space, highlighted the importance for Bitcoin investors to remain steadfast and not be influenced by immediate market responses to Federal Reserve actions, advocating for a focus on the long-term value of Bitcoin. Bitcoin AR noted that such pullbacks are not unusual, having observed 8 comparable corrections since October 2024. The recent fluctuations can be attributed to Bitcoin's significant ascent earlier in December, during which it momentarily exceeded the $100,000 mark. This surge was fueled by heightened enthusiasm regarding a prospective Bitcoin exchange-traded fund, ETF, anticipations of the forthcoming April halving, and speculation concerning Donald Trump's potential candidacy in the presidential election. In the current volatile market environment, experienced traders recognize that price corrections are a standard occurrence, particularly during phases of price discovery. Analysis of historical data indicates that temporary downturns frequently manifest during the 7th and 8th weeks of Bitcoin's rally phases. Analyzing the situation, Bitcoin's volatility stands out as a defining characteristic of its market dynamics, influenced by speculative interest, macroeconomic conditions, and the continuous evolution of cryptocurrency adoption. These adjustments, although disconcerting in the immediate term, frequently create advantageous entry points for investors with a long-term perspective. Investors should adopt a balanced viewpoint, understanding that the long-term potential of Bitcoin is influenced by fundamental elements, including its capped supply, rising institutional adoption, and its increasing status as a store of value. Although Bitcoin's price may experience fluctuations in the short term, its long-term prospects appear robust, with significant potential for growth as the cryptocurrency landscape develops and macroeconomic factors change. Let's get back to Lyn Alden interview.
it's less so. In addition, what we've generally seen in this past, like call it 2 years of this rally, is we've seen a rally in quality. So S&P 500, soared back to new highs. Bitcoin's chopping right around its highs. Gold's new highs. Whereas look, for example, at like ARK. So ARK Innovation ETF,
Yeah.
unprofitable tech stocks, that's still nowhere near its highs. When you look at broad crypto, the vast majority of them are no longer nowhere near their highs. And so in 2021 you had a rally in like everything. You had a rally in quality, you had a rally in junk, everything's
Mm.
going up. And what makes this rally somewhat different, one is that the liquidity is less explosive than 2021, even though it's positive. And two, because of the high interest rates and kind of mixed economy, this has been a situation where quality really does matter. It's not just everything going up. It's things that are profitable or that are the best in class of what they do. So gold rallied better than other precious metals. Bitcoin rallied better than most other cryptos, at least anything of scale. And Nasdaq rallied better than ARK, um, because it's profitable companies versus often unprofitable companies. It's not to criticize ARK. It's just highlight
Yeah.
what a segment of unprofitable tech stocks generally is doing compared to the really wide moat entrenched profitable entities out there. So it's been a quality rally.
And I guess that in theory makes sense in a normal bull market that is not stimulus induced, right? We don't have investors piling into everything. It's just people
Yeah.
picking the best of things.
Yeah, it's been more selective. Generally you've seen cyclicals kind of, do okay. You've seen
Yeah.
financials do okay. You've seen emerging markets off their lows, but nothing spectacular. And we look at individual names. I mean, I keep highlighting that Costco is trading at over 50 times earnings. Um, which is, I mean, if anything, that means investors are still feeling very defensive. They're saying, I want to own something that's like completely bulletproof. Um, and they're willing to, in my opinion, overpay for that. And so, yeah, I think it's been a rally in quality, sometimes even a little bit extreme rally in quality. And
Yeah.
I find I'm someone interested in a little bit less quality stuff, kind of like the moderate quality, you could say, things that are profitable, but they're not overbought in the way that some other things are.
Federal Reserve Chair Jerome Powell recently discussed the implications of Bitcoin ownership, indicating that the central bank faces legal constraints preventing it from holding Bitcoin, as outlined in the Federal Reserve Act. At the press conference held on December 19th, Powell emphasized that the Federal Reserve does not intend to alter this legislation, indicating that any modifications would require action from Congress rather than the Federal Reserve. This statement underscores the central bank's prevailing position, which has persistently conveyed a cautious approach towards direct engagement with cryptocurrencies. In the current climate, President-elect Donald Trump has brought renewed attention to the potential for the U.S. to establish itself as a frontrunner in the adoption of cryptocurrency on a global scale. Trump has proposed the establishment of a strategic Bitcoin reserve as a component of a comprehensive approach to maintain a competitive edge over countries such as China, which have been notably active in the cryptocurrency sector. Increasing speculation surrounds the possibility that Trump might implement an executive order to designate Bitcoin as a reserve asset upon assuming office, a move that could have substantial implications for both the U.S. and global financial systems. Powell's remarks underscore the Federal Reserve's prudent and regulatory-focused stance regarding Bitcoin and the broader cryptocurrency market. The Federal Reserve continues to show minimal interest in Bitcoin. However, the discourse surrounding it is shifting, especially in light of increasing political pressure from influential figures such as Trump. Trump's advocacy for a strategic Bitcoin reserve indicates a possible transition in U.S. policy that may incorporate cryptocurrencies into the national financial framework. The formalization of this initiative could represent a significant advancement in recognizing Bitcoin as a reserve asset akin to gold, potentially leading to substantial consequences for both institutional and retail investments within the cryptocurrency market. The overarching situation indicates that Bitcoin is increasingly recognized as a viable store of value. Concurrently, as global governments assess regulatory structures, the United States appears to be in a favorable position to take the lead, particularly in light of potential executive measures from Trump. The potential for increased institutional adoption is significant. as a more conducive regulatory framework may incentivize major financial entities to participate in the Bitcoin market with greater transparency. This situation presents a pivotal moment for investors. The Federal Reserve's cautious stance, coupled with increasing political backing for Bitcoin, has the potential to catalyze substantial policy shifts that could bolster Bitcoin's credibility and attractiveness as an alternative asset class. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.